There's been a lot of discussion in the press and paper recently about the delays of getting prime cattle into abattoirs, and also there's a sort of longer term fall in cattle price that has been apparent for the past 3 or 4 weeks. So what's happening out there? The basic building block comes back to the old economic argument of supply and demand. However, the supply and demand is much more complex than just that single expression. So let's have a look at the supply side to start with. What's happened there is that the volume of cattle have been starting to fall. So the past month that we have slaughter statistics for, Scottish abattoirs handled fewer cattle. Indeed, the UK as a whole handled slightly fewer prime cattle. But the price had continued to fall. So there's a conundrum. So the next stage we look at is to say, but why? And one of the reasons why is that all the cattle that we're supplying to the market at the moment are heavier than they were 12 months ago. So although the number of cattle has reduced, the volume of beef produced in Scotland and the UK has actually increased slightly. The second contributory factor has been the strength of sterling. This has made it difficult for our processors to export, while at the same time making inputs look more attractive. So we find that over the first quarter, the exports of UK beef have reduced by about 2,500 to 3,000 tonnes, but the imports have increased by about 4,500. You add that to the increased volume of beef from our domestic supply, and we find that the market's been working with about 8% more beef than it did last year. That wouldn't be a problem if consumption was racing ahead. But when we turn to consumption, we find, although it has improved a little bit, helped in some cases by discounting at retail, it's not improved enough to absorb that extra supply. Complementary to that, of course, is that consumers buy bits of beef. They buy roasts, they buy steak, they buy mince. And some of these products are selling better than others. This means that for our processors, the product that is not selling as well is building up in store. And a lot of this then has to find a home in the manufacturing trade, and the manufacturing trade is proving sluggish. So those are the elements that explain a little bit why we have seen a slide in farm gate price, and why some of our producers are finding a sort of extended period to get their cattle into the market. If we start to look forward though, in terms of the farmer operation, it's beginning to look a little bit more promising. We know from BCMS data that the volume of cattle that will come forward as prime stock over the next 6 to 9 months will diminish. We know the same scenario will happen in Ireland. This in turn will mean that the abattoirs will be able to manage the sale of these less popular cuts out of their cold store, and the whole supply and demand balance will come closer together. In conclusion then, the farmers have had quite a difficult first quarter, driven by things that are a little bit out of their control, although you could say they could do something about carcass weights. If we start to look forward, then the balance is beginning to swing back, or will begin to swing back, towards producers. We know the availability of prime cattle, both in Scotland, the UK and Ireland, will diminish as this year progresses. So over the next quarter, half year, we'll see the volume of cattle arriving at abattoirs slow down a little bit. That then will give the processors the opportunity to clear their cold stores, and then the whole balance of the market begins to rebase, and it is likely at that point that we'll see a little bit of firmness in the market for the producer.